Hello and welcome to the market update for Tuesday, May the 11th. Now, if you look at just the numbers based on yesterday's close, it looks like the market's having a terrible day. And for the Dow, it's a pretty decent down day, but in context, it's really not too bad. When we look at the chart, you'll see what I'm talking about. But what you might fail to see is that there's a pretty strong bullish reversal in the Nasdaq 100, Nasdaq index, and the Russell 2000, and even in the S&P 500. So again, I can't emphasize enough the ability to be able to read price action is going to help you dramatically in your trading and even in your investing career. Being able to kind of read this stuff. So now the training today is going to be on, we're going to get back into some candlestick analysis, and candlestick analysis is what helps us analyze price action. And I taught a candlestick class a couple months ago, but I basically just went over the basics of candlesticks, a few different candlestick formations. But I really felt like I needed to spend some time on each one, or at least the major ones, so that you can really learn how to recognize them and read them and trade with them. Because like I said, this is when I talk about reading price action. I'm really talking about reading what those candlestick formations are telling me about really what's going on. And today's a great example of that. You could look at today, and I'm sure if it closes the way it's looking to close right now, all the news people all night long are going to say it's a terrible day on Wall Street, or it was a big down day or a very negative day. But the underlying pattern is that it's looking actually like a pretty strong bullish reversal, particularly in the Nasdaq. And like I said, we'll look at the chart here in just a second, and you can see what I'm talking about. But as far as the direction alerts, again, I'm not seeing anything that is telling me the market is overbought. The momentum's, again, moved back down off that extreme area. Brett, same thing, moved off that extreme area. We're just kind of hovering right here. Now, we have had a few days where we just kind of whipsawed back and forth. And, talking about today being a little bit of a bullish reversal, the same thing could possibly happen where we just whipsaw right back down. Last week there were some pretty decent bullish reversal signals and bearish reversal signals that we were getting, and by the end of the week I was like, boy, I'd see a bullish reversal and I'd be like, yeah, I'm sure that the stock should open up tomorrow, but I don't know if it's going to immediately show a bearish reversal. And that's kind of what we had, where we've kind of gone back and forth. But what we're really seeing is a rotation going on. People are talking about how much the market has been up, and they've been focusing on stocks that have really, really done well, but they haven't pointed out that there are sectors like tech, big cap tech, Facebook, Netflix, Amazon, they've just gotten beaten up. And then even the small cap stocks and even small cap tech, the electric vehicle stocks and things like that, the ones that were really roaring in November and December and into January, they've just been crushed. And so I think there's real opportunity here because, I've been talking about a larger correction. I'm just kind of, the screen's going to be just frozen right here for a second while I'm just chatting here. But if you're wondering why, you're just looking at this breadth indicator. But I've been talking about a larger correction happening, and that we're kind of building towards that. There were these topping signals we were getting. I've been pointing that out over the last couple months. But I think what we're getting is not the whole market correcting at once, but we're getting portions of the market correcting. I really think that the Nasdaq has had a good part of its correction. You look at the individual stocks; a lot of them come way off their highs, and so for good reason. I mean, the way with money being poured into the economy and bond yields starting to rise and inflation possibly coming. Usually, you don't want to get into high risk trades in that type of environment. but I think it's possible that we could just start seeing segments booming and correcting at different times, and maybe we do start to see not necessarily those tech stocks rally to new all-time highs. You don't necessarily have to do that, but they might be about to rally for a few weeks or so. We'll see. Again, I'd have to see more follow through than just one reversal day, but when you look at the individual charts and how beaten up they are, it's hard to assume that they're going to drop too much further than where they're at right now. The sentiment indicator is backed off as well, although we are getting a little bit of a spike in the VIX today. We'll look at that when we look at the individual charts here in just a second as well. On the buy-sell ratios, I don't see anything extreme here. We're pretty close together, and this is reflective of that whipsawing that's been going on, kind of going back and forth, up one day, down the next. The Dow index is the only one that's really been kind of steadily moving higher until today. The other indexes have been actually kind of back and forth. The sentiment indicator is off its extreme range, so there's no overbought condition I'm seeing there. When you look under the index tab right here, you can see why the Dow is getting hit the hardest today. It's been the most overbought as far as the buy sell ratios. You've got a ratio of 22 on the Dow Industrials. 22 stocks have buy signals, only one has a sell signal. And anytime you get the double digits on this, it's indicating an extreme area. Now, it doesn't always mean it's going to pull back immediately or anything like that. It doesn't mean that the Dow index has to crash from here or anything like that. But it's definitely pointing out that it's at an extreme level. And on the flip side of that, you look at the Russell 2000 has a very low ratio there. There's still more buys than sells, but you can tell that it's pulled back a lot further than the Dow index there, and it's showing up in the ratios here. And that kind of, when I see that, it kind of fuels that belief that maybe we're going to start to see some of these smaller cap stocks that haven't been participating in the rally start to rebound a little bit. All right, let's go to individual charts here, so you can kind of see what I'm talking about. So on the S&P 500, you can see, yes, we're down. Here's where we opened. We actually had a sell-off early where we moved lower, and then we kind of moved back up. And we're trading right now higher than where we opened. We're still down compared to the day before, but we're up from where we opened. This is a pretty significant bullish reversal candle. It's one of those that I always tell you to look for. The opposite is true too. The bearish reversal one I go over a lot too. And I can maybe I'm going to do a full training on those reversal candles. So I'm going to just briefly kind of go over this one right here. But this is one of those that it doesn't show up, or it's not really visible to people that don't know what they're looking for. If all you're looking at is the screen on CNBC and you're seeing the S&P 500 is down and down by a decent percentage for the day. In fact, let me go up here at the top of the chart. So it's showing the S&P 500 is down 1%. 1% is a pretty decent down day, but that's not telling the whole story. When you have this, we do have a couple hours before the market closes, so this could all change. If we fade dramatically into the close and close lower than where we opened, that'd be a pretty decent bearish day, because it failed to rally off that open. But if it holds right here, and especially if the volume is higher than average, and I think so far today it's been that way. Let me take a look at the volume. It looks like the volume is going to exceed the last few days and be higher than the last few days. Then that's a little subtle bullish reversal. Now, what's important to point out with any sort of reversal is a candlestick, at least, is that the candle itself is showing you very short term what's going on. The longer term conclusion comes from the rest of the chart pattern here. So, and that's something we we have to be aware of, because it's possible that this is showing a bullish reversal day, and maybe we do rally for a couple of days or something. Maybe we come up in this area right here and then roll over again, and we end up with a bearish head and shoulders pattern. Well, ultimately, that could be forming a bearish pattern. Maybe the market still corrects and goes lower. But in the near term, it did rally off of that bullish reversal price action. And so, in order to draw a larger conclusion, so in other words, what I'm saying, let me skip over to the NASDAQ. Why do I think then the NASDAQ could possibly be rallying up from here? The SPY chart's a little early for me to make that conclusion. I think it could rally for a few days off of that bullish reversal candle, but why am I a little bit more bullish on the NASDAQ 100? Well, in the context, the NASDAQ 100 has already been beaten up. It's, it had this move up right here, and then you can make the argument this is wave A, wave B, wave C. Either way, it's come way down, and now you're getting a strong bullish reversal candle. Opened all the way down here. This is where it opened, and it's actually almost gone positive. In fact, it's gone positive a few times. It's been back and forth, gone positive, negative. It might be positive again right now, but in the context, here was a move up. Here's a step right here. Here's a move up. This might be that step right down here, and it's kind of pulling back to where that previous high was over here. This could be possibly a start of a rally to where it breaks out to another new all-time high. I don't know yet. I mean, again, this could all change, but this looks like it has the potential to have more of a rally off of it. So and that would fit the argument that maybe money is going to come out of some of those industrials and retail and things, and maybe move into some tech. Now, it's also this whole thing could also collapse. One thing I always say about market sell-offs is they're often fueled by expectations that things are going to go higher, meaning people buy the dip because it's worked every time, the whole time during the uptrend. Every time the markets pull back, they buy the dip and it goes right back up, and they feel smart, they feel confident, they feel like there's no way they're ever going to lose. They've got the perfect trading system in the world. And then what happens? You get the dip, people buy it at first, and then it fails, it rolls over, and then you really get accelerated selling. Because now everyone's in a panic because they don't understand what's going on. And that's definitely possible. Even as down as some of these individual tech stocks are, what could happen is you get a market flush where everything sells off, but those stocks don't go down that much further because they're already down. All the sellers are pretty much already out of those stocks. But you could see the rest of the market follow suit and drop along with it. That's definitely a possibility, but I just don't see that yet. It's not lining up like that yet. But definitely in one of these updates, if I see it, moving that way, I'll definitely point it out. But let me go to the Dow chart here. So again, this one's been outperforming. And today's sell-off is, I actually bought puts on the DIA yesterday because it was signaling a potential pullback. We had a gap up right here on Monday. Here's where it opened. It rallied up to an extreme right here. Everyone's talking about how the Dow's moving higher again today, and then what did it do? It reversed. It sold off. Ended up closing lower than where it opened. That's a bearish reversal. Not surprising we dropped down from here. Now, notice how the Dow isn't it's trading lower than where it opened. So here's where it opened. Here's where it could end up closing. Now it could come off those lows at the end of the day. Maybe if it rallies all the way back up, that would be pretty bullish for the Dow. Look like a stronger bullish reversal. And it wouldn't be clear to everybody else because it would still be closing lower than yesterday. So a lot of people would still be talking about how bearish that was. But if it does close here, that's actually still pretty bearish. Now, one thing to keep an eye on here is, again, notice the pattern I was talking about of the stair step. You know, you move up, you correct, you have a little step, you can kind of move more sideways, more choppy. You have an impulsive move up, step, impulsive move up. Now, what can often signal a potential trend reversal? Well, at least one of the early signs, you look for impulsive up followed by impulsive down. So you get impulsive up, impulsive down, and then the opposite starts to, you get the downward stair step where you correct with a little bit of a sideways choppy move and then have impulsive down. How do you know when you could be reversing from a downtrend into an uptrend? A lot of times you'll have impulsive down followed by impulsive up. And then corrections, you know, so that stair step, well, you can see it here. We had impulsive up, here's more choppy, corrective, impulsive, more choppy as it pulled back here, impulsive, more sideways right here. Now you got impulsive up, and it looks like we could be getting impulsive down. At least that's what the early signal is with this, as long as that closes lower today. And so that could be signaling the early stages of maybe a little bit of a bigger pullback in the Dow. Now, what could confirm that? Well, again, if this is true, you probably have another down day into this area here. There's a little bit of support in this area from this little sideways move. And then what you'd look for is on the rally, does it rally strongly all the way back up? Does it look like it's an impulsive move back up? Or does it look like, does it try to rally and it ends up being a little bit more choppy and more sideways? You know, because again, that would, you get impulsive up followed by impulsive down, and then you should get a corrective move or choppy move, and then that should set up for another move down, and that should be the pattern on the way down, stair stepping down. So if it looks like it tries to rally, and then maybe you get an up day and a down day, an up day and a down day, or up a couple days, down a couple days. It doesn't have to be day to day, but it just looks sluggish, like it's trying to rally back up. The dip is trying to be bought, but it's not. You know, it's kind of sluggish coming back up. That's usually a good signal that you have another move low. You should have another move lower, at least one more move lower. And that's what kind of creates that ABC pattern too on those pullbacks. You get that. You know, here's one right here. You get that initial sell-off right here. That's wave A. Tries to rally up right here. That's wave B. And then you get that final sell-off that creates that wave C. So that could be wave A. This could be wave A of a correction, a little bit larger correction. Tries to rally, a little bit choppy. Be wave B, and then you get that one more flush out move for wave C, and then maybe you start a bigger uptrend. So that's what I'm going to be looking for. And you know, I want to see if we don't have to necessarily drop a little bit further, but usually if this is just a one-day pullback, we're right back up again. We're probably going to end up going higher again just from there. That was probably the correction right there. If it pulls back a little bit deeper, and then as it tries to rally, it's a little bit more sluggish. And I'm sure we could probably have more of this to observe on Thursday. We can look at to see if that's what it's doing. How far did it continue to drop, and is it trying to rally back up a little bit? We might have a little bit more of a chart there to kind of read at that point, but that's what I'd kind of be looking for. And then I mentioned the Russell as well. You also have the bullish reversal and the Russell. And again, this is still that head and shoulders pattern, and that's a neckline, which means that if that is a bearish head and shoulders pattern, really the Russell should have further to drop. It should not only get to that neckline, it should go below it. Now, Mike, I think I talked about this last week, that it still has potential where it's still forming this right shoulder, meaning maybe it does rally up back up to this area again, around that 230 area again, and then has a bigger drop that brings us down further. That's always the tricky part. Is you know, we can know the general pattern, but sometimes that general pattern can be drawn out over you know, a little bit longer period of time. It doesn't always have to drop right from this peak right here. You could get a couple more touches along that area there before it drops. Which is why at this point I'm not fully confident of any direction in the market right now, particularly after last week. It was back and forth. I made money last week. That was the good news, but I didn't make a lot, because usually you make bigger money when you get the direction right and it stays in that direction for at least a few days. You know, that's when you make the big money. But if you had been talking to me last week, it'd be like one day I'm really bullish on what I'm seeing, next day I'm really bearish, and you know, it's like I've got a split personality or something like that. But that's what you have to be. I mean, you have to be like that. You know, my job is not to predict. My job is to read the direction, get the direction right, so I can make money. And sometimes that's hard to do when you have to kind of put your ego in the closet. All right, so let's continue to go down through the list here. Bonds, let's take the volume bar off so we can see some of these charts. Bonds, we were assuming this was just a rally within the downtrend. I told you that this was kind of the key area right here that we'd look at to move above. That was the last significant lower high on the way down. Lower highs and lower lows. We did get a little bit of higher high, higher low, but this looked more like kind of a correction within the downtrend, and it looks to be moving that way now. We're starting to probably have another impulsive move down. We've gone to a lower low today, taking out that previous low right here. You didn't have, I would call this a little bit more of just an even high, not necessarily a lower high, but an even high and then a lower low. It looks like it's starting to roll back over here again and maybe start to move down. So I'm still pretty bearish on bonds. Gold. Gold's changed. I'm a little bit more bullish on gold. What was the key area we were looking at on the gold chart? This was the last significant lower high on the way down. Lower high. There was a lower low right there and a lower low down here. Since then, we started to kind of have higher. Well, this is a little bit more of an even low, but then we had a higher high right here, higher low right here. But I'd like to get above that last higher or lower high on the way down to give me a lot more confidence that this is an uptrend and not just a correction within the downtrend. And we did recently break back above that. So I think we're in an uptrend in gold. Pull back a little bit today, but look at this, a little bit of a bullish reversal candle, open lower, looks like it's going to close higher. But yeah, I think at least in the near term, it's looking like gold is reversing into an uptrend. That would be my outlook based on what I'm seeing right now. Until that changes, what would cause me to change that? Well, if you've got higher highs, higher lows now it looks like you're in a true uptrend and not a correction within the downtrend. You had a higher high right here. This last higher low right here is going to be significant. If you come back down and break below that, now you've got a lower low, and it would indicate that maybe things are rolling back over again. So we'll keep an eye on that over the next few weeks and see if it could change, because if this thing, if it pulls back, even if it rallied up from here, that'd be a higher low right there. If it pull back a little bit and it goes to a higher high, then this higher low becomes the next key area to look at. As soon as you break that and go to a lower low, it could indicate that you're reversing trend. All right, oil looks like it's getting ready to break out higher. There's the previous high right here. It did end up breaking higher. I think I talked about that last week. Pulled back a little bit. It's been moving a little bit sideways right here, which is fine. It happens a lot when you're near a breakout area. Nice little bullish reversal day, opened it lower, and then it looks like it's getting ready to break out again. You've got the higher highs, higher lows on this way up. So this is going to be significant. This is the last higher low right there. So if it breaks below that, that would be bearish for oil. It looks like it's going to break out higher here. And that's really the big talk right now in the markets, is energy has been one of the leading sectors to be in. And this is confirming that should continue, at least until we see different. The dollar is trending down. We tried to bounce a little bit right here, but we were talking about how that looked like it was just a rally within the downtrend, lower high. It's gone to a lower low. And the VIX, you can see the VIX spiking up a little bit. Now, I think this is significant because, so we're seeing a spike in the VIX, and you've been hearing me talk about how bullish I am, but I'm not bullish on the whole market. Remember, I'm bullish on the tech sector right now, the NASDAQ, because I think that's, and even the Russell 2000 to some extent, at least in the near term, because those sectors have been beaten up quite a bit. Now, I think it's important to point out that whenever you're looking at the VIX, I can't compare the VIX to the NASDAQ 100 because that's not what it's calculated on. It's based off of the S&P 500 index options. That's what the VIX is calculating, is the changes in implied volatility on the S&P 500 index options. And that's what the big institutional investors use to hedge their portfolios, buying those protected puts. So this is definitely saying there is concern today amongst those institutional traders. But again, like I talked, I don't want to rehash everything I talked about at the beginning of the update. I think what's going on is that we're not looking, at least as of right now, I'm not looking for a correction of the entire market. I'm looking at corrections of parts of the market and rotation going on. At least for now, that's kind of what seems to be going on. So now that could change, and maybe this is a signal that everything's going to drop and we're heading lower on everything. It's way early on just a one day spike up on the VIX. But what I tend to look at to kind of read what's kind of a leading indicator that can help me a little bit with the NASDAQ index. I've talked about this before. You can look at the semiconductors. What are the semiconductors looking like? And the way to do that is you can use the semiconductor ETF. The SMH is the ticker symbol. Why do we look at the semiconductors? Well, the semiconductors run the tech industry, right? There's semiconductors and everything in the tech industry. And so when those stocks are doing really well, it usually means that the tech stocks are doing well or have potential to do well. When it starts to break down and we're seeing weakness in the chip sector, you start to see weakness in the whole tech sector. So you start to see the chip sectors roll over right here, bounce a little bit, it's come back down, kind of stair stepping down. Now it's still a downtrend right here as far as the stair step. But again, when I'm looking at as maybe an early signal, that bullish reversal candle where we opened all the way down here in the morning, we're almost going positive. In fact, we might be positive here. Let me see. Now we're still just barely negative, but we're just about to flip positive there. And that could mean that we're going to get a little bit of a rally in the chip sector. It also could be forming a little bit of a bullish inverse head and shoulders pattern where you have the left shoulder, the head. This could be the right shoulder. There's the neckline up there. There's the upside down head. And usually the right and left shoulders terminate in about the same spot, and that would be right at today's open. So that kind of makes me feel like, you know, we might have this bullish reversal in tech. So we'll see. We'll collapse here, and I'll look like a complete idiot. But that happens all the time as well. So, all right, that kind of wraps up the update. Let's go into. I'm just going to go into the. Now let me double check here real quick. Actually, let's go into let me go over a stock or two here. Let's go to the sectors under transportation. I've done rail before. That still looks like a pretty good one here. Let's go down to this NMM, Navios Maritime Partners, 93 strength rank. But I like the chart pattern here. You can see you've got impulsive up. Here's kind of a step or correction. Move up right here. This looks like it could be a little bit of a corrective move right here. It's still kind of holding that overall trend line up. And you had a bullish reversal candle right here. See what the volume looks like. Yeah, it looks like you're going to get higher volume today. Yeah, I like to see higher volume on these sort of reversals candle. You like to see higher than average volume. And if you turn the signals on here, it's a hold signal, but it's probably very close to going back to a buy. And that'd probably be good to get some confirmation for it to go back to a buy. But I think that I like that pattern there. And the transportation stocks have been pretty hot lately. And then another one in that sector is Amte right here. It's a 92 strength rank. Here again, it looks like it could be kind of forming that inverse head and shoulders pattern right here. Because if we rally off of that, at the very least, if we rally off of that, you've got a higher low. Here's a little bit of a neckline. I mean, it might even be like this, where that's the left shoulder. Here's the head. Here's the right shoulder. That would actually fit a little bit better because that'd be a massive left shoulder over here. But you could just have the left shoulder here. Here's the head. Possibly the right shoulder terminating about the same spot. Neckline right here. If that's the case, I love these. These are my favorite patterns to trade. If that's the case, this thing should be working its way back up to these previous highs. Not immediately. It could take a lot of time. Probably will take a lot of time. And it may not be. Maybe, maybe if it dips back, definitely if it dips back below here, you'd be concerned. If it dips back below there, it wouldn't be a head and shoulders, a bullish head and shoulders pattern. So inverse head and shoulders pattern. But I like that one. You wait for it to go back to a buy signal. All right. Let's get into the training for today. We're going to talk about engulfing candles today. Bullish engulfing candles, bearish engulfing candles. Now, one thing I will start off by saying when talking about engulfing formations is nowadays a lot of people know about candlestick charts. When I first started trading, it was like brand new. It was like the newest thing to analyze, and not a lot of people knew about it. And the nice thing is that because not a lot of people knew about it, they weren't seeing what I was seeing, and it gave me a huge advantage. And some of these formations worked almost every single time. I mean, especially engulfing formations. I saw bullish or bearish engulfing patterns. They had like a 90% success rate, and then as I noticed years into my trading career, it stopped working as well, and I attribute that to just education. More and more people learn about candlesticks because it's phenomenal. I mean, like I said, it's how you read price action. But as with everything we talk about, there is no perfect signal that can tell you exactly what a stock is going to do or exactly what the market's going to do. You always have to keep that in mind. But all we're looking for is an edge. But there are some guidelines as we get into the engulfing formation. So what is an engulfing formation? Well, when you're in an uptrend, each of these are candles representing a day of trading in this case. By the way, you can, in some charting services you might have, you could switch to a weekly chart where each candle would represent a full week of trading, or a monthly chart where each candle represents a month of trading, or a 60-minute chart where each candle represents 1 hour of trading. And these candlestick formations work the same way, no matter the time frame that you're looking at them. Okay, but a bearish engulfing pattern would form if you're moving up in an uptrend. And usually you want to be moving up for a little while to have it. I like to see at least a decent upward move before the reversal, because it's going to be a stronger reversal signal. If you get a one-day move and then get an bearish engulfing, it's not as strong. I wouldn't trust it as much. So I guess rule number one, you'd want to see a trend in a trend direction. We're looking for a trend reversal. So you want to see a clear uptrend for a bearish reversal, a clear downtrend when you're looking for a bullish engulfing reversal. So in an upward move, you'd see, let's say you're moving up right here, and then you have a day. Usually you'll have a compact day, a smaller day, but it's still higher than where it opened, and that's key, because these candles have to be in opposite direction. So you have it opened down here and it closed up at the top here. The next day it gaps up and it opens higher. So it opens up here, but then it immediately starts to sell off, and it needs to close lower than the low of the previous day right there. So then this would be a red candle or black or whatever is representing a down day. So the next day right here, this bearish candle needs to engulf the day before, and they need to be going in opposite directions. This was an up day, this is a down day, and that down day engulfs it. And as key, you want it to gap up, so it's got to be higher than the high of the previous day and close lower than the low of the previous day. Now, this gets into an area where you can get the debates with quote unquote candlestick experts. Ideally, you'd like to have the entire price action engulfed, meaning you see each of these candles, they have these little extensions that come out, right? You have the body of the candle, which is the one that's colored in this case in gray and then in red, but you also have these little extensions that come out. Ideally, you'd like to have all of it contained, meaning if this had a little extension up that day and a little extension down that day, you'd like to see it gap up above all of it and close below all of it and totally engulf the day before. Okay. However, in reality, it's very rare to find those complete engulfing moves. And sometimes you have a tail that barely moved above the top of that one or barely moved below the bottom, but the body is engulfed. Over the years, what's most important to me is that the body is engulfed, and I don't like to see the tails get too far outside of the body of the reversal day here, but I will allow it. And it still will work in most cases. So I just think that's one of the anomalies that's happened as more and more people have recognized this pattern, that there are little variances that over the years. So that the old timers will say, no, it has to engulf everything. But that was the case back then because it used to engulf everything. Now, as the price action kind of is a little bit, it's changed a little bit. You don't get that very often. You'll get these little false moves that might break out of that range there a little bit. Okay, but you want to try to stick to engulfing the entire price action the day before as much as possible. The other key, I think, with this is you want to see volume. It doesn't have to be huge volume, but you'd like to see higher than average volume, or at least higher volume than the last few days. Again, can it still drop on lighter volume? It can, but it's less reliable. And that's the most important thing. I'm not saying you can't trade it if it's lighter volume, but just realize there's a greater chance it would fail. Because remember, what volume is telling you is significance. So here you're getting a bearish reversal, but the volume's lighter than the last couple of days. What's the significance of that reversal? Well, not as strong as if it had higher volume than the last couple of days, right? So it's just common sense as far as that's concerned. Now, another thing to be aware of is that it doesn't mean that always that the stock is going to drop immediately. I mean, it's a bearish reversal signal. Doesn't mean that you're going to start crashing down. It does a lot of times, and it'll give you that nice pointy top to it. But sometimes it'll try to fight it a little bit. You might see a couple days where you're trying to rally up or something, or you're kind of moving a little bit sideways there, and then it rolls over. So don't be worried about that. In fact, usually what I'll do as far as a trade is if I shorted right on that bearish reversal, on that engulfing pattern, as I would put my stop above the high of that reversal, or of that engulfing day right there. So put a stop up here, because if it rebounds and goes above here, it's completely wiped out that reversal. It's just overrun it. It's not going to work anymore, or it's told you that reversal is insignificant. Let me show you some live examples of this, and then we can kind of talk about it, because I think it's a lot better than my drawings. Okay. I just went through just a common watch list. I go through just to try to find. So there's nothing real significant to some of these. And a lot of these are in the past, but that's how I can show you how they worked. And I'll go over a few that are showing up right now. There's a lot that are showing up today that we can go over. But they're bullish ones, not bearish ones. But the bearish one, let's go to Carnival Cruise Line. And let's look back here. Let me take the volume on. Well, I might need to leave the volume on here. Ooh, we can barely see it without it not getting covered up by this box right here. But see, you had this run up right here. You had a move higher right here. And look what happened the next day. You gapped up and you moved lower. So you had the bullish candle this day, and then the bearish candle completely engulfed the day before. Had higher volume come in. Not huge volume, but higher than it's had. Now notice the next day it did move lower, and look, it tried to fight to go higher here. It went up and then it kind of slid down and dropped down and had this little move down here. Again, that candle is not telling you that you're going to get a massive collapse and it's going to come way down. Sometimes it will. All it's really signaling there is that it should go lower, and it did. And that's why we call it a bearish reversal candle. Let's look at a bullish one. There's a really nice one on Splunk right now. SP. Okay. At least last time I checked. Hopefully it hasn't changed. There we go. You can see. So on a bullish one, it's going to be the opposite. You want to see a downward move. So here's a downward move, down, 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 down. It's clearly been moving down. You have a bearish day the day before. Here's a day where we closed lower than where we opened. Today, what happened is we opened lower. We gapped down right here, opened lower. And as of right now, it looks like we're going to close higher than the high of the day before. And it's going to look like we've completely engulfed that day. Now I can't see the volume because they're right up against the volume. Let me see if I can do something here. Let me go into like I can select this area here and zoom into it and see if it'll. I still can't see the volume on that. If I go out a little bit further. It looks like, from what I can see, it looks like volume is very close to being higher than yesterday. So it looks like the volume would be okay on that one. Let me go back to a 6-month chart here. See a 1-year chart. Maybe a 1-year chart will show. We'll be able to see the volume. No, it's kind of in the way there. Anyway, that one looks like a good one. Now, does this mean that Splunk is going to go all the way back up here to $200? No, that's not what that candle is saying. All that candle is saying is that it's a bullish reversal. Maybe it goes up for a couple of days. Maybe it just rallies up into this support area right here and then rolls over and goes lower again. What becomes valuable, though, is that if you get a candle signal with a longer term chart, that's where it can be really valuable as far as timing is concerned. For instance, let's say you have a stock that's stair-stepping up, has an ABC correction, stair-steps up, and then let's do another ABC, and then it moves up, and then you get this wave A, wave B, and you're in wave C, so you're moving lower, you're getting a down day, and a down day, and then you open lower, and then you rally back up, you have a bullish engulfing pattern. Well, the bullish engulfing formation is saying that it should move up within the next few days. It should go up off of that reversal price action. But if you combine that with the larger term chart where you have this correction, you got this big move up, you got this correction, you have this move up, it looks like this is a correction. You could say, not only do I think the stock is going to go to a higher high and move up, but this bullish reversal candle is saying it should start right now. So when you can combine it with other analysis, that's where you can draw bigger conclusions to what that short-term price action is telling you. But I'm not necessarily seeing that here, especially since we've been in a downtrend. This is just showing that it should rally off of that, based off of that formation. Let's look at another bearish one, SUNW, Sunworks. And let's go back to April right here. So this is one that is kind of that, it's that little bit of that question mark. You have the upward move right here, had a bullish candle right here, then you had it gapped up, it opened higher, closed lower than the previous day. So you've engulfed the body of the previous day. You've completely engulfed the bottom, including the wick there, the intraday low right there. But the intraday high moved a little bit higher. The body of it's engulfed, but the intraday high moved a little bit higher. A pure old-time candlestick analyzer would say, nope, that's not a bearish engulfing because it moved a little bit above the intraday high. It didn't engulf the intraday high as well. This is one where I would say, I might go ahead and trade that anyway. I'd put a stop above the high of the engulfing day right there if it happened. And here, look what it did. It opened right here and it tried to rally higher again. Didn't go above that high of the open of the engulfing day. If it did, I'd stop out of it. Now, the one thing I didn't like about this one, though, that might have probably, I didn't trade this, by the way, but this is just what showed up when I was going through my charts. I don't know if I would have traded that because what's missing here? Something I went over when I said that it's important for this pattern. Look at the volume. You had this big volume day the day before, and yes, you engulfed the day before, but the volume was way light right there. Now, it doesn't have to be, if the volume would have been up around here where it wasn't as high, but it was still higher than it's been, you know, these are lower bars right here. If it would have been at least above average, it doesn't have to be higher than the day before. I need to point that out. But if it's higher than average, it would have been okay, but it was just average volume. So I don't know that I still might have taken it. Like I said, I don't look for perfection in these patterns, but I go into them understanding the risk. So if I see a bearish engulfing on lighter volume, okay, there's a better chance that it could fail because the volume's not there. So I still might make the trade because a lot of times they still work. But if it didn't work and it started to rally back up, you know, I'm going to be able to recognize right away, okay, that's not surprising. The volume was lighter. It's not surprising that it's not working. Let's get out, cut our losses, find another one. Another way I might ignore volume or ignore the extensions is if it fits the larger pattern, like I talked about with that ABC pattern. You know, if I get an ABC pattern on the C leg right there, I get that bullish engulfing pattern, but maybe it's a little bit lighter volume than I'd like, or maybe it doesn't quite engulf the intraday high and intraday low of the day before. I'd still probably trade that just because it fits the larger trend. The larger trend, it looks like it's the good entry into that trend, and I might ignore some of those other things I'd like to normally see in a candle formation there. Now, I'll tell you, I usually like to see a real clear, I don't mind some of the extensions, but I'd like to see a smaller body on this bearish one right here. I'd like to see it clear, the body clearly engulf the one before. When it's real close like that, I just found it doesn't work as well a lot of times. Let's show a couple more bullish ones. Let's look at Zoom video. Have the same problem here with, we'll see if we can see the volume limit, but you can see the drop. And again, there's the day before, it was a down day, and it's clearly engulfed it. Open lower, gapped all the way down here, and that's run all the way back up, engulfed it. And we probably just go back to a 1-year chart on this and see the volume down there, see if it's higher. Yeah, it looks like it's going to be higher than the last couple of days. That's a pretty decent bullish reversal candle. Now, again, maybe it only rallies. There's a lot of support right in this area right here. Maybe it just has another up day into that area there, and that's done. And it doesn't. And remember, just like with the bearish reversal candle, it doesn't have to go up immediately. Could it try to drop again tomorrow, or it tries to move lower again, and then for a few days maybe moves a little bit sideways and then takes off? Yeah. That's why on a bullish engulfing, I put my stop below the bottom of the engulfing candle, the body of the engulfing candle down there. Because if it came all the way back down and dropped below that, it would wipe out the significance of that reversal. Now you say, is this a bearish engulfing right here? Technically, it did engulf that was an up day right there, engulfed the day before, and it did drop off of it. What would concern me a little bit, though, is I'd want to see a little bit more of a run up. This was just basically the day before it was down. It was in a downward move. It just had one up day, and then it engulfed it. That was probably off of an earning announcement. I'm just guessing, because usually you don't see that violent of a reversal like that unless there's like an earning announcement. But I would prefer to see it at least a few days where it's been moving up before getting that bearish reversal, that bearish engulfing. Here's one on Palantir. Again, he had the drop, opened lower today. Now, this had an earnings report out last night, had a what is a pretty favorable earnings report. And some of these form a lot of times on earnings reports. I prefer actually when they aren't based off of an earnings report, just because when they form when there's not a lot of news out there, they tend to work a little bit better because it's kind of subtle. Not everyone's looking at it or watching it. But this had very high volume today based off of the earning, or anytime there's an earnings report, you're going to see really high volume the next day. So that's another thing too, is volume signals significance, but earnings reports always generate high volume, but they don't always predict the next move, meaning there's a lot of false moves that can happen off of an earning announcement. Earning announcements it's just so unpredictable. I usually stay away from them just because it's too much guessing. There's too many things that can happen that are random. You could have the most bullish looking chart going into an earning announcement. They could report the greatest earnings in the world, and it opens all the way down here the next day. Everyone decides to sell on that news, right? And you're like, well, what was predicting that drop? Nothing. Nothing was predicting it. It just happened, and I don't like situations like that where I feel like I have to guess, or that it could completely reverse what everything else is showing. And so that's why I tend to avoid trading earnings. That's a nice one though. Bullish one there. See, I have Disney down. Let's look at Disney. This was back in February. Right here, you have this run up at a small up day right here, gapped up, closed lower than where it opened, engulfed the entire day before. Again, these candles have to be opposite. This one is up, this one is down, and engulfs it. And then you had this little drop. It was a big drop. It dropped, but it dropped. It did work. It dropped for a few days. You did have higher volume on that reversal, very high volume on that reversal day. That's what you like to see. By the way, candles are really valuable for option trading because you might only get a short-term move, but you can really benefit from that short-term move with an option. You get the leverage of the option, and you could double you could double your price of your option, double your money on a small move like that off of that candle. So those of you that like options or start to get into options from the option trading I did earlier, that this is going to be a valuable tool in your option trades. All right, let me do a couple bullish ones that are happening right now, just because they're happening right now. There's a lot of them that are out there, though. I'm just scratching the surface with a lot of these. FCEL, FCEL. Oh, this is one that we don't know if it's going to be a engulfing yet. I did add that in there because if it moves up a little bit higher, it can move up above yesterday's open. You do have the volume there, and it would engulf it. That's why I put that one in there. I said this one's close. Now, even if it doesn't engulf it, that's still a bullish reversal candle. It's just not an engulfing formation, but that one's real close to being an engulfing. Twilio, TWLO. So here, you have the drop. It's clearly going to engulf the day before, including the intraday low there. You can take the volume up. You can see that it opened lower than the low of yesterday. The question mark would be the volume. It's not going to be higher than yesterday probably, but it's higher than average. The average volume is down in here. Oops, and then here, and it's already above that. And that's all I would need. It's just is it above average volume on that reversal? Bring up Caterpillar. Now here's a engulfing right here. How come that one didn't work? You had an up day, you had a engulf the day before. Well, again, look at you're not getting that big run up. It was actually moving sideways, and you got the engulfing. Anytime it's moving sideways, it's not going to be as significant. You want to have that upward move followed by that bearish reversal, or a downward move followed by that bullish reversal. J&J, this is like a little bit of a possible bearish engulfing, and the run up. The volume is looking like it's going to be it's maybe average, maybe a little bit above average. It is engulfing the body from yesterday, but again, you have that intraday high yesterday. This would be one of those question mark ones. I'd still consider trading this, but I would understand that it did have an intraday high yesterday that's above where we opened today. I would have liked to see a little bit better volume on that, but that's a possibility. You can see what happens with this one over the next couple of days, see if it drops. It's a Dow stock, so if the Dow moves lower, it could definitely move lower with it. Verizon is another Dow stock. It's kind of the same thing. Big reversal day, but didn't quite engulf the entire intraday high from yesterday. Problem though is volume's a little bit lighter. I would like to see heavier volume on that. But you could watch that and see if it drops off of that. All right, let's wrap things up. So hopefully that gives you a little bit of able to spend a little bit more time on some of these specific ones. We'll go over some more. You'll find there's a lot of different reversal candles, and so as you learn how to recognize each one, the bottom line is that they're signaling reversal. So there's not necessarily one that's always better than the other. I do have my favorites that I like, but as you learn to recognize them, it's not really important you get the name right either. Some of these have some Japanese names, as you'll notice when we go over them, because that's where this analysis originated. But I don't care if you ever remember the name. If you can remember the price action and what it's actually signaling, that's what's most important and the most valuable. All right, thanks everyone. Have a great week. We'll see you Thursday for the stock specific class. Bye now.